Hey, good morning, guys. This is Eric with Inspired Trading. It's August 24th. Hope you guys are doing well. If you hear talking in the background, I'm a parent, so my child has online school as well. But I want to get this video done, so just bear with me. All right, let's make it happen. So I'm just going over Apple. Just doing a quick little analysis just to help people understand that sometimes you just need to be patient and not worried about chasing things. All right. Clearly on this chart, we can see that Apple is in an uptrend. All right. The trend is up. Now, it's at all time new highs as well. All right. So, how do we go about trading Apple? Well, one of the few things we can do is we can go back and we can plot areas where price created market structure, such as right here. We had an all-time new high here in October of 2018, and then we had a massive sell-off. Okay, so we know that this could be a good support level as well. All right, let's move on. We break from this all-time high. Okay, spread this out. Here we go. All right, so we broke and we retested the area, and we finally made our move to the upside, and then we created another resistance. All right, and look what happened. We pulled back down to where an area that used to be resistance now serving as support. So this was a key area that if you were trading, looking for trade opportunities, you wouldn't look for the breakout, so to speak. You will wait for the retest. You would want price to come back down to this area. Now, this is about $230 on Apple, and it eventually dropped to 211. You're not going to be precise. All right. Sometimes you are. This was a little deeper drop. Now, some people could have scaled in, bought a little bit at this point, and bought some more at this point. But regardless, it did come back to market structure. But if you look left, look at this structure right here. That's where it came and settled at. Here, all the way, boom. Reset structure, right? Okay. Now, look where we at now. Let's pull this down. All right, look where we at. Who's buying up here? All right, who's buying? FOMO, people who are fear of missing out. They're buying here. Don't buy here. Fools will. All right. So we don't want to buy up here, right? We want to wait to maybe price coming back into this area or even down into this area. But what we could do is we can look and we can pull up a Fibonacci retracement and take it from the swing low to the swing high. And then we can plot areas And we want to look for right around a 61% area. So this is in this zone right here. But here's what we call confluence. All right, so check this out. All right, we're here in this level, but if you look left right here, where you had an area where price came up, rejected, and then broke. But price could come back and revisit this area. Well, it's called confluence because this area falls right at the 61% retracement level. All right. What is the next level? It's the 78. Can't see it because it's blocked by the candles. But the 78 falls down into this area that could be serving as support. So price could possibly make its way back down. You hear me saying these words possibly because we're forecasting. That doesn't mean it's going to be 100% correct. I could be wrong, and Apple can go on up to $5,000 for all it care. All right. But if you stick with a trade plan, we don't buy here. You can if you want. All right. And I don't mean call people fools, but according to my trading plan, we wouldn't buy here. All right. Somebody can say, well, Eric, I bought here and look, I'm up. Yeah, that's fine. And a lot of times, some people who buy here, they don't even have a plan, they don't have a strategy. Okay, when do you sell? What do you do? Okay, if you bought here, but let's say price comes on down here, you know what happens? You feel bad because you didn't maybe sell here, or you feel upset, and so you bought high and then you sell low when it comes crashing down. But if you got a plan here, that's fine. If you plan on saying, hey, I don't care what the price do, I'm just gonna scale in over time. If it goes down, I'm just gonna buy more. If it goes down, I'm just gonna buy more. Then that's perfectly fine if that's what you want to do. But we're in the critical stage because we're in the expansion stage. Whenever price starts to get away from these moving averages, that becomes a critical parabolic move, and it gets dangerous and unsustainable. This move worries advanced traders, even institutional traders. They know that they need to start scaling out little by little because this is unsustainable. The only people who are pushing this up now are retail traders. Your institutional traders are not buying. All right, they're not buying here. Institutional traders buy in this area here. All right, they buy in this area. Why? Look at the moving average. It's in a contraction state, not an expansion state. You should never buy an expansion. This is expansion. Look at the gaps between these. It's expansion. But look here. Everything is compressed, contracted. You want to buy in contractive states. Look at this contraction. You should be buying these, even though we did get a push to the downside. But if you understand that if you got a great asset, you can take some of this. Now, this doesn't work for someone who's maybe taking out option contracts and they got time decay and they're trading, but this is more so for investors. All right. Look at this. Somebody bought up here, and already we've lost 7. I believe it went all the way up to, well, I went up to 515. Now we're down to $504. All right. We've already lost $10, between $10 and $11 off of this. So, I mean, by the end of the day, it could push higher. I don't know, but why get in this emotional roller coaster? You don't have to. Okay. So, I just want to do this quick little video just to show that there's certain areas where so this broke to the upside. What we're doing now is we will plot and set alerts. All right. I would get an alert, and I can even do it on this chart. I just right click, add alert. All right. I'll use a crossing. I just stick with a crossing. All right. So this means whenever price cross, let's say I'm gonna do, I don't know, let's say do $300. Once it crossed $300, I want them to notify me on the app, which is on my phone, do a pop-up, send me an email. Message, Apple crosses 300, look to start scaling in. All right. So Apple, that message should come to me. All right. Hit create. Boom. And you got other apps out there that we could do something similar. But this is TradingView. So you can do that on TradingView. All right. I'm on a daily chart looking at Apple, and these some areas plotted where we think price coming down. Now, I put mine for 300. So you see this dotted orange line. When price reach right here, I'll be alerted. Okay. So let me do a swing low, swing high. Let's see where that falls. All right. So listen, remember I told you I wanted to come down to the 61% retracement. So if I get alerted right here, now I can come to the chart and I can watch and I can see what it's doing. I can see what type of candles are forming. Do we have some engulfing red candles? That if we do, I may look and say, I need to monitor and see how price reacts to this level because it could smash through. And if it breaks this 61%, you got a high probability it's going to come down to the 78. So I may not put much in on this level. I may just put in maybe 20%. All right. So this is, like I said, this is trading strategy. We use. We try to keep it simple, not complicated, man. Just have a trade plan, and there's a trade plan for. If it don't follow the trade plan, don't. I mean, come on. Apple's not the only company in the world. Okay. And so there's plenty of other companies out there. It's just be patient. All right. So I'm going to show you the patience. Like, look at this. All right. People bought up here and then they got slaughtered. Then some of them sold down here. But as this broke, somebody said, hey, wait, let me be patient and let price come back to you. And look what it did. It came back. And now they're good. Now they can say, hey, I'm looking now to what? Take profit. You may leave a certain position in. So somebody say, hey, I'm going to take 40% of my position off the table and leave 60% to run. But as price comes back down here, I will use some of my profits to buy back in at these levels and repeat the process. Okay. So just want to give y'all a video. This is not investment advice. It's just my opinion. Just going over a strategy, that we use. And hope you guys have a great one. I look to post more content like this in the future. Hit the like button. Please subscribe. Y'all have a great